Welcome back to the deep dive. Today we're looking at a frankly alarming analysis. It's titled The 2026 Financial Singularity Thermodynamics of a Guaranteed Crash.
And it is not pulling any punches.
Not at all. This source doesn't just predict a downturn, it models the entire financial system as a single machine.
A machine that has just flashed its biggest warning light. It maps the whole thing as one overloaded circuit. And as of today, December 16th, the status is, well, it's systemic failure active.
So our mission here is to figure out why this source says a collapse is guaranteed. And it really boils down to three huge pieces failing at the same time.
Right. You've got MicroStrategy in the crypto market, the private equity credit system, and then this huge AI spending cycle.
And they use this great analogy to explain it.
It's a thermodynamic analogy. So you have the reactor, which is MSTR in crypto. That's the source of all the heat and volatility. Then the thermal battery, which is private equity, storing all that systemic risk.
And finally, the high-load device. That's the AI capital spending, just draining all the power from the system. Okay, so let's start with the reactor. The source claims it's already in a state of meltdown.
Yeah, and that's because Bitcoin just breached a huge support level, $86,000. And that breach, it just instantly reversed what everyone called the infinite money flywheel for MicroStrategy.
Explain that flywheel. It's all about the premium.
It's all about the premium. The stock was trading way above the actual value of the Bitcoin it holds, the NAV. People were paying extra because they believed the hype.
But now,
MSTR's most recent, most aggressive Bitcoin purchases made at an average of $92,000 to $102,000 are suddenly 15, maybe 20% underwater.
so the genius allocator narrative just evaporates.
It's gone instantly.
And-
The buyer of last resort idea is finished.
And that gets us to the trigger, the actual mechanical failure point. They call it the gamma feedback loop.
This is the financial doomsday machine. It's not about feeling or panic. It's just math. There are billions of dollars in put options that expire on December 19th.
Bets that the stock will fall.
Exactly. And the market makers who sold those options as MSTR stock falls through strike prices, 160, 150, 140, they have to hedge. They are mathematically forced to short sell the stock.
Creating a self-fulfilling prophecy.
It's an artificial vacuum of selling pressure.
Yeah.
The machine takes over.
So the reactor melts down, and that causes the first shock wave. Phase one, the liquidity shock, which is happening now.
Right. So the crypto adjacent funds, they get margin called.
Yeah.
They need cash immediately. And what do they sell?
Their most liquid assets.
They're ATMs. And the source specifically calls out big tech, especially NVIDIA. They're just dumping it to raise cash. And you see the global signal in the Asian markets, the Nikkei, the Hang Seng, they're dumping hard.
And that shockwave travels straight to phase two, the credit freeze.
It goes right into the thermal battery, private equity. All of a sudden, lenders are looking at the collateral for their loans. You know, all the GPUs, the data centers, the crypto mining gear.
And they realize its value is crashing right alongside Bitcoin.
Exactly. They realize they're holding a sinking asset, and the battery freezes. They stop rolling over the cheap credit that all these small-cap zombie companies in the Russell 2000 need to survive.
So you get the zombie flush?
It's a machine where all three warning lights just went red at the exact same microsecond.
Which sets up phase three for early next year. January 15th, the MSCI index decision will likely force billions in passive selling of MSTR from ETFs and pensions.
And with no capital, the AI CapEx just stops, dead. The soft landing narrative is officially over.
The key takeaway here seems to be that this is not a normal correction.
Not at all. The source is clear on this. It's an exponentially dangerous leverage unwind. You have corporate leverage with MSTR, market leverage from the options, and structural leverage from the ETFs, all unwinding at once.
So the chilling conclusion is that this is all automatic. It's built into the system's mechanics.
That's what the source calls the financial singularity. It's the point where these feedback loops between crypto, AI, and private credit all synchronize perfectly for a crash. The machine, it seems, just has no brakes. The real question for you to consider is what happens when a crash isn't driven by human fear, but by pure, cold, algorithmic necessity.